Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hello everyone and welcome to another episode of the Brisbane Property Podcast. My name's Scott Jennison from Streamline Property Buyers. I'm the Acquisitions Manager here and we have a market update time.
Another market update. You know as much as I do how much I enjoy sharing the latest data for Brisbane and also helping our listeners to understand what we are observing on the ground. And this month is not going to disappoint for those that are looking for the update of all of the latest because we've unpacked all of the data and some would say good news for Brisbane property owners in that we've now seen the second consecutive month of small price increments once again. So those median value changes that have been declining since June last year when we hit the market peak, that trend has reversed, and we're going to unpack the reasons why that might be happening here in Brisbane and share all of the other data with you today.
Yeah, I know that as we said before, a lot of work goes into these market updates and they are probably the most popular of our episodes through the podcast. People love getting the market update and all the information just to see what's actually happening, not just in the data, but actually what we can help out with what we're seeing on the ground as well, live here in Brisbane.
Yeah, I think a lot of people have been asking us and want to know, when are we reaching the bottom of the market? A lot of people try to time their property purchase. And unfortunately, what we always say is you never know when the bottom of the market actually hits until you're looking in the rear view mirror. And for those that truly want to know, the data is now suggesting that we hit the bottom of the market earlier this year in the first couple of months of 2023. If you're a regular podcast listener, you will have heard our commentary from the beginning of January where we started to share information about what we were seeing on the ground, and that was that the buyer volume was increasing at the same time as the supply numbers, that's the number of properties that were available for sale, was declining. And obviously when you get an imbalance of supply and demand, you actually get that upward pressure on prices. Now, when we're looking at data, we always talk about the data being the settled sales information. So what we see on the ground is always ahead of the data, and settled sales in Brisbane, anywhere from 30 to 60 days generally. So that's the time frame that it takes for the data to filter through and become a settled sale number and therefore a data point. So the fact that the data showed that we hit the bottom of the market, if you like, in February, March, indicates that it's in line with what we were seeing back in January, where the market was picking up and those contracts that were being entered into at that time were at a price that was slightly higher than the contracts that were being entered into in December. That's reflective in the data based on median trends.
And as a general overview before we jump into it, listing numbers are definitely low. Auction clearance rates are pretty strong, still good. Buyer activity is very high. We're seeing house and unit values on the up and good yields, good strong yields. Keeping in mind also when we look at April, we did have a lot of interruptions here, especially in Queensland, where we have those extra sort of holidays, obviously the normal ones of Easter and Anzac Day. They throw in early in May, that May holiday we have, but a few interruptions in the market where we've had a few long weekends and a few public holidays along the way.
And let's not forget, in April, that was the month when the Reserve Bank of Australia opted to maintain interest rates at their current, at the standard rate at that time. Since then, there has been a further 0.25% increase. But we do believe that rate hold in April actually provided a level of confidence for buyers that reignited some interest in properties. Some of the lending data now suggests that, more people are preparing to borrow. So that's also an indication of potentially the demand that is yet to hit the market. But, I think that any change in interest rates where we are assuming that the market has peaked in terms of that interest rate cycle is going to fuel that demand back into the property market because buyers want certainty in terms of what their costs will be. And remember, we've spoken about this a number of times in the podcast. Not all buyers have been impacted in the same way. Those that are on higher incomes that can still, borrow money at higher interest rates to buy the type of property that they're looking to purchase, have been much less impacted than those on lower incomes who may be now priced out of the purchasing market.
So new listings tightened again during April, pardon me, according to CoreLogic. So new listings were down negative 22.5% compared to the same period last year.
And yeah, at the same time, the volume of sales across Brisbane also declined 22.3% over the last 12 months. So it's interesting that those two data sets sort of align in terms of the rate or the magnitude of the decline. It suggests that for every new listing that becomes available, there is a buyer, and that buyer is transacting. We have seen that the total listing volumes change much less than the new listings. So that suggests that there's still a lot of stale listings that are sitting on the market. And we're not, we've always indicated that those properties that are B and C grade properties, they are sitting on the market. Demand for quality is high, but demand for a lack of quality in the market has really diminished. And those properties that may be flood impacted, for example, or sitting on main roads or in less desirable parts of a suburb, they're taking a lot longer to sell. And that's also reflected in the total listing data. That said, total listings are still well down on the 5-year average here in Brisbane at the same time that demand is elevated. So new listings definitely trending a lot lower. 22% less than this time last year. Sales volumes also down about the same rate compared to 12 months ago, but total listings relatively the same as 12 months ago.
Also back in April, the Queensland government introduced their changes to the frequency the landlords can increase the rent on their investment properties. So as of 1st of July, they're not permitted to increase the rent in a new lease less than 12 months. So basically every 12 months is when they can reassess that and increase the rent side of things. That was backwards and forwards a little bit, but that was actually brought in April as well. And
look, it's important for people to understand that any proposed changes by governments, it can impact on the sentiment of investors getting into the market. Of course, we saw those proposed land tax changes. In fact, they were legislated land tax changes here in Queensland. It really did impact on the number of investors that sold out of the market. And in fact, we're recording a podcast with Tim Lawless from CoreLogic, which will dive into that information in more detail. That podcast is coming soon. So hope you look forward to that one. But on top of that, we've since had discussions around rental price caps. Now that hasn't been introduced, but the frequency of when landlords can put their rent up has changed, and that is now a minimum of every 12 months. So, all of these things that try to control how a landlord is able to use their asset that they own, it can impact on the sentiment and confidence for consumers that are looking to invest. And of course, that's had a significant impact on the purchasing appetite for investors in the Queensland market. And as a result, the volume of investment properties that are available has diminished, and we find ourselves in a rental crisis, partly because of those reasons.
And despite that, we're still seeing a lot of buyers out and about. So on the weekend, there's a lot of activity. Buyers are out in high volumes. Open homes, a lot of numbers going through them. Auctions, we'll go through some on the ground, as I mentioned earlier, towards the end of this. But the auction clearance rates and the buyers are out and about in numbers as well.
And if we look at clearance rates as reported by Domain, you may recall last month, for the month of March, we saw an average clearance rate across Brisbane of 53%. Up till the end of April, that increased to an average clearance rate of 62%. So that is actually a big shift in demand, or rather a big shift in those clearance rates. We always talk about the fact that clearance rates are not always an indicator of the market as such. Sometimes, we're seeing the volume of registered bidders increase month to month, which is an indication of the number of buyers that are willing to buy under auction conditions. But sometimes it's that seller's motivation to let a property go that prohibits a sale from taking place. Where there's concern for us is when you turn up to an auction and there's no registered bidders. That's an indication of low demand, and therefore a change in the sentiment on the ground. But when you turn up and there's multiple registered bidders and it does not sell, generally that's more of an indication of sellers' confidence to let a property go at the price that the market is willing to pay.
Cool. So let's jump into some property values. So if we start with the dwelling values in Brisbane.
Yeah, so we've had a turnaround in the quarterly growth for Brisbane dwelling values. That's now positive. So in the last 3 months, we've actually seen quarterly growth in Brisbane increase 0.1%. Over the month of April up to the 30th of the month, 0.3% increase in dwelling values. So the median value for a Brisbane dwelling is now $6,945 more than just 1 month ago. So that is the change over a 4-week period that we've observed based on this small increment.
And if you compare, that was all through CoreLogic?
Correct.
And then if you go to have a look at PropTrack.
Yes, you'll recall we like to, provide details of both data sets. PropTrack confirmed the same trend. So 0.14% increase in dwelling price growth over the month of April. And, that is also showing the positive trend continuing, which is also a reflection of what we have been seeing on the ground over the last quarter.
A little one part I do like to have a look at occasionally as well is that the segmentations, and I find that quite interesting just to see how that has changed in the past. So can you just run through some of the breakdown of that segmentations?
Yes, when we look at the top 25% of property values, the middle 50% of property values, and the lowest 25% of property dwellings in Brisbane, we can see that there's been a more of a decline in property values in the top end compared to the lower end. One thing that could explain this is that this is all dwellings data. And as you know, if you're a regular podcast listener, we've seen stronger growth in the unit segment of the market than we have in the housing segment of the market. And when we look at the median value for a unit, that sits in the lowest 25% of dwelling values when we combine that with dwellings data. So it's always important to understand the data that you're looking at. But when we look at the lowest 25% of property values, when we're looking at dwellings data, there has been a quarterly decline in values of negative 0.6% in that segment of the market in Brisbane over the last quarter, compared to the top 25% of property values that showed a median price decline of negative 2.1% across the same period. It's really important to understand, and if you are interested in a deeper dive into the price segmentation, I encourage you to tune into our up and coming episode with Tim Lawless that we're going to explore that in more detail.
There'll be a lot of data going on in that podcast, I'm sure, and I'm not sure how many words I'll actually get in, but it'll be a really, really interesting and an exciting podcast to bring to everyone, our listeners as well. So if we jump and break it down now into the house prices.
Yes, obviously dwellings data is representative of everything that sells, but it's important to break it down into the housing market and the unit market. So quarterly house prices in Brisbane, according to CoreLogic, still down negative 0.1%. But when we look at the trend monthly, that has been increasing. And in fact, in April, we saw growth in the housing sector in Brisbane of 0.2%. Very small growth, but it does show that the trend is increasing month on month, especially off the back of last month where it was 0.1%.
And the median house price there then, Greater Brisbane, 781,881, which is 9,861 more than last month.
And I think that's the important number to take away when we're looking at, a very small change in property values of 0.2%. But when we apply that to the median value, we're just under $10,000 worth of change in a month. That is, it does become significant for people that are, looking to buy and perhaps delaying their decision because of the uncertainty around interest rates or, consumer confidence or whatever that uncertainty might be. Sometimes when you see that the bottom of the market may have passed, really quantifying and understanding the opportunity cost of delaying a decision, if it is indeed your intent to buy, can help you to become more confident to move forward, especially when market conditions are showing that, we have potentially passed the worst of market conditions.
That's pretty much what I was actually about to say to people. When you really do break that down and you look at that number, if you're looking for a home in that sort of median sort of area, that's, as you said, $10,000 a month. So if people do sort of sit back and go, I might just wait, I'll see what happens. If you are waiting and this does continue the way it is or improve more and continue to go up, you're looking at probably around that 10,000 plus per month that it's actually going to cost you more next month.
Absolutely. And then unit price changes are also showing a similar trend, although that trend is a little bit stronger on the upside. So when we look at unit values, according to CoreLogic, we've had 0.9% growth over the month of April. And the quarterly trend for unit price growth, according to CoreLogic, is now demonstrating a 1.1% increase in values. And for those that want to quantify what the change over a 1 month period has been to get into the market at the median value for a unit, which is $498,374, that's a change of $5,959 over a 4-week period, based on 0.9% growth. So again, just a number to keep track of if you are thinking of getting into the market, because if you're looking at recent sales and trying to factor in the price in the current market, it's important potentially to consider what direction the market might be moving.
Really good way to look at those numbers. I think when you talk about percentages, but when you actually break it down to numbers, I think that's a really nice, simple way for people to understand that how the market is moving and those little changes, what they can actually do. Back up onto the home prices. Sorry, we didn't touch on that Proptrack. So they've shown a monthly increase of 0.17%. And that takes the median value to $807,000.
So Proptrack in line with CoreLogic data there for the home price changes, whereas Proptrack showing something slightly different in the unit segment of the market. It showed negative 0.02 change in Brisbane unit values over the month of April. Again, just not sure why that trend is different to CoreLogic, but important for us to highlight that the two data sets in this instance are a little bit conflicting.
Now, I know that we talk about this a lot, and we talk about this rental market and how it's extremely tight. The rental side of it, what's the latest on that side of things?
Look, we all know, and we hear it often in the news and in the media, that there is a rental crisis going on in Brisbane. Rental vacancy rates are still at record lows, although I will say that with the April data that's just been released by SQM Research, there's been a really small uptick of 0.1% change in total vacancies across the city. So we look at March, we're at 0.9% citywide vacancy rate, but in April, we're at 1%. Now, if we break those down into some of the regions, most regions showed a change of 0.1% up on their vacancy rate across the months from March through to April. The only areas that remained stable were Ipswich and West Brisbane. So if we run through some of the current vacancy rates, for the Beenleigh region, we're sitting at 0.7%. The CBD, 1.1%. East Brisbane, 1.1%. Inner Brisbane, also 1.1%. Ipswich sitting at 1.3%. Now, you'll recall that's one of the regions that had no change over the last month, but we have been seeing an increasing trend in vacancy rates throughout that region since August 2022. So the stabilisation this month perhaps is an indication that that is starting to change. Northern Brisbane, 0.9% current vacancy rate. Southeast Brisbane, 1.2%. Southern Brisbane at 1%, and West Brisbane, 0.9%. Again, one of the areas that had no change over the last month.
Very, very tight on the rental side of it. And it was interesting that most of those are that, as you said, there was only two areas that were different to the 0.1%. So interesting that it's so consistent over the board.
And one thing that I'd like to give a little bit more depth to this month is the rental vacancy rates in the unit market versus the housing market. When we look at the 10-year average for units in Brisbane, the 10-year average vacancy rate has been 4.1%. Now, that's off the back of the oversupply that we had in the inner city unit market, especially from around 2016 and the years that followed. Right now, the unit vacancy rate is 0.7%. That's actually tighter than the housing market. When we look at the long-term trend in Brisbane for housing vacancy, it's sitting at 3%. So right now we're sitting at 1.3% for all houses across Greater Brisbane. So you can see based on this information that units at 0.7% vacancy, houses at 1.3% vacancy. We've actually got a tighter vacancy rate in the unit market, and perhaps that's why we're still seeing more upward pressure on unit price or rent prices than housing rent prices. So when we look at the annual change in rents in the unit market, we've seen 16.5% change in Brisbane. Now that's off a tighter vacancy rate in that segment of the market. But the important thing to note is that trend is still continuing upward, meaning the annual change in Brisbane unit rents is still trending upward. When we look at the annual change in house rents in Brisbane, it's currently sitting at 10.3%, but we did reach the peak rate of growth a few months ago there. So perhaps as the housing vacancy rate starts to creep up a little bit in the city, we're starting to see the pressure on, or the upward pressure on rents ease, and potentially that's because a lot of people or a lot of tenants are reaching their affordability cap and there's just no potential for them to pay more. But this is something that will play out in the months ahead.
Yeah, some interesting information there that you've got on those that rental side of things as well.
Yes, I think that the rental price affordability, if you like, it's going to become more problematic in some locations compared to others. And if you listened to our episode on the breakdown of the demographic data here in Brisbane, it's very relevant to understand which locations might reach those rental affordability situations sooner than others. At the end of the day, it is relative to someone's capacity to pay more rent as to how far rents might be able to go. And look, if we look, for example, on the last census data by the Australian Bureau of Statistics in 2021, suburbs including areas like Caboolture, Deception Bay, Sandgate, Scarborough and Waterford West, they had a larger than average portion of their population who was spending 30% or more of their take-home income on rent. And this was well before a lot of these areas experienced rental price growth in excess of 20%. So, paying more than 30% of your take-home income in rent, it's actually a benchmark which defines rental stress. And these are some of the areas where we might find rents ease much faster than other areas. On the contrary, there's other areas such as Barton, Camp Hill, Upper Kedron, and even Wilston that have a much lower portion of their resident population who are in rental stress. And this is why that demographic data becomes really important. So if you are a property investor looking to invest your money, and especially if a rental return is important to you, but also if that capital growth is important for you, understanding who lives there and their capacity to pay either rent or pay for a home is critical in understanding the future performance. Because when we look at the last 10 years when interest rates were only ever declining and getting lower, that is a different type of investing compared to a higher interest rate environment where we see some of these rental stress situations come into play. And what's happened in property here in areas of Greater Brisbane, especially in the last 4 or 5 years, it's not going to be the same as what we're going to experience in the next 4 or 5 years. So don't look backwards and assume that what's happened very recently is going to continue to happen in the future. It's really critical to get expert advice if you don't understand the fundamentals.
Yeah, for those property investors, that's definitely something you need to consider, because the location, that'll change what growth you'll have in that the rental side of it as well. So making sure you're buying those right locations that will keep growing in value, and also the rent side that people can afford to pay that rent as well. The demographics and the people that are living there can actually afford to pay that rent increases as they go along.
And of course, if we start to see more and more tenants reach that point of rental stress, we will see, and I think we've already started to see this in Brisbane, that tenants will make a compromise on how they live and the type of dwelling that they will live in. Because if they don't and they want to stay in a house, they're going to get pushed further and further away from the CBD. And that brings other lifestyle changes such as increased commute times, changes of schools, and more inconveniences to the family unit. So we've already seen this heightened demand in the unit market and the townhouse market, and perhaps this is another reason why we've seen a shift in the demand based on affordability. For people to stay in the same locations, if they cannot afford a house, they might be looking at an alternative product type such as a unit or a townhouse, so that they can stay in the same location. It provides a more affordable option without having to compromise on the lifestyle that they've become accustomed to. But keeping in mind that rents in that segment of the market in units and townhouses are still escalating and are still increasing month on month. So, that segment of the market has not yet potentially reached its affordability cap.
So a bit of a summary. Overall, property for property owners, obviously looks very positive. Not so bright for tenants. That, as we say, rents are going up, and it's very, very, very hard to find a property as well. So, but property owners, investors, it does look very promising, and everything looks quite rosy on that side of things.
Yeah, and I think that, let's not forget the very short but sharp downturn that Brisbane experienced in those median property price values. We hit the peak of the market in June 2022. Here we are in May 2023, and we're suggesting that, the bottom of the market is now behind us, based on what we're seeing on the ground, but fundamentally based on very low supply, but also this heightened demand coming back in the market. And based on what we're seeing, and we've said this for a number of months, quality is still attracting very high demand, and quality is selling fast. And I'd argue in the last 4 weeks, yet again, we've seen more properties sell after that first open home. We're seeing sales agents put pressure on buyers again to make quick decisions. And we're starting to see buyers bring that FOMO, or that fear of missing out, back into the purchasing process. When buyers have FOMO, they can often take risks, and that's not something that we would ever encourage buyers to do. So, being in a position to understand a property, complete all of the due diligence up front, understand pricing before you physically inspect is really critical in a market that might be a faster moving market, so that you're not making an emotional decision off the back of pressure from a sales agent who might be closing offers very quickly. So our recommendation is do that work up front before you inspect, because a lot of agents are closing offers again quickly, especially when it's a property that you're lining up to get into on a Saturday at an open home. And we're seeing a lot of evidence of that again in certain pockets around the city. Yeah,
and why wouldn't people want to move up here? We're still seeing good numbers moving up to Brisbane. I do touch on this, and I tease on this all the time, that the weather's not too bad up here. We had a little bit of rain around lately, but it's still beautiful for this time of year, where we do get those chilly nights and the sunshine during the day. So still getting high numbers in migration, and also work. People up here, there's so many jobs for people that if you want a job, there's jobs out there for people to get. So people are migrating. People have got work, and people that migrate need somewhere to live. So that will keep pressure on that rental side of it as well, and increase the numbers of buyers out and about.
And, Queensland as an economy is performing extremely well when our economy is compared to all of the other states around Australia. And in fact, just recently, CommSec put out their State of the States report, and Queensland ranked very closely behind Tasmania in second place. And the strength here in Queensland does relate to relatively high population growth, and also low levels of unemployment. However, the weaknesses were in relation to construction. Now, if we think of that from a property fundamentals perspective, we may not have high levels of construction, which means we've got fewer properties being built, which is creating more of a supply issue in the future. If we had high levels of construction, that would mean that we would be bringing more dwellings into the market for people to potentially purchase. So even just looking at the strengths and weaknesses in Queensland and how that might relate back to, property owners or property investors looking to get into the market, we don't have a huge volume of supply that's coming into the market because construction has slowed down so much, and therefore, what we've got is effectively limited supply already, with no prospects for good, solid improvements in the supply pipeline. So, with population continuing to increase, that's going to put further pressure on the rental market, because everyone needs a home, whether they're renting. But we're also starting to see some of those renters who get to the point where if they have the capacity to buy, they will buy, because, they're finding it harder and harder to rent, and those rents are escalating very rapidly at the moment. So people are starting to make that decision to move into the market as a buyer. So, that's putting pressure on the rental market, but also the home buying market, which already has higher demand.
Bit of an example on the ground, some auctions attended last weekend here that our team were out and about. A property at Stafford, 11 registered bidders, 5 actually bidding at that auction. It sold for 1.65 mil. Another one at Ashgrove, there were 4 bidders on that one, sold for 1.415. In Kenmore, 5 bidders at that one, sold for 1.16. Another one at Kedron, 7 registered bidders, 6 actually live bidding, sold for 2.65 mil. Another one at Audley, it actually passed in, but they're working with conditional buyers on that one. So you can see the numbers on those auctions. They're strong numbers. When you're getting 4 or 5 people actually bidding, they're good, strong numbers as well. A-grade properties, as Melinda touched on earlier, those A-grade properties, agents are selling quite quick. They're giving a little bit more time, maybe. Maybe after the weekend, they might close it on a Monday or a Tuesday. But those A-grade properties are selling fast. If you're interested, again, as Melinda said, that tip, if you're interested in a property, let the agent know you're interested, talk to them about it, and make sure you're ready to go because it could sell quite fast.
I hope that's been a valuable update to help you understand what the data is showing here in Brisbane and also what we're seeing on the ground. Of course, our team get out to, 10 to 15 properties every Saturday to see in real time what's actually happening. And there's no better analysis than being on the ground. That qualitative information gets you ahead of the data, and that data is that quantitative information that comes through once properties have settled. A combination of both puts you at the forefront of making the best possible buying decisions when you are looking to get into the market, especially as an investor, but also as a home buyer here in Brisbane. If you are interested in ensuring that you don't miss out on future episodes, hit subscribe and head to our website. You can subscribe to our podcast, streamlineproperty.com.au. Hit the podcast tab, enter your details, and we'll send you a weekly email to let you know when the new episode is up. There's also bonuses for subscribers that will be coming within the next 4 weeks. So look out for those if you do choose to subscribe to the podcast. There'll be additional bonuses for you that we'll talk about in future episodes.
And thanks to all our loyal listeners that listen all the time. We appreciate it. And it's lovely to talk to people as well that say they enjoy the podcast. Market update complete. I will let Melinda wrap it up as I normally do. As we've said, keep an eye out for the coming up episodes with Tim Lawless and some other exciting guests. So we'll have more of those coming shortly, but I'll let Melinda wrap it up. It's been great talking. Thanks very much, and bye for now.
As always, if you have enjoyed the content that we've shared today, please leave us a review on iTunes or Spotify or wherever you listen to this podcast. We always love hearing from our listeners and obtaining that feedback from you. Share the podcast with friends and family as well. It's the way that more people get to hear some of the information that we shared. And, now that we are the number one podcast here in Brisbane, obviously we're keen to continue to grow our audience and share more information with a wider group of individuals. As always, we hope you have a fabulous week and we look forward to speaking with you again soon. Thank you so much for your time. Bye for now.